Okay.
Good afternoon, Sir Grino.
Good afternoon. Nakamute pala ako.
I'm glad you're there.
Yes, of course. I'm always glad to be of service to PCU.
Very good.
My alma mater.
I hope you will be able to enlighten us with your
Yes,
knowledge of
in fact, as I said,
countries.
Professor Nunez has a very comprehensive presentation on World Bank. I think what I will do is I will present actual transaction and processing methodology, which will complement his lecture, because I don't want to duplicate.
Very good, very good. I'm really glad.
Thank you, sir. Gracias.
Si Doc March nandiyan na? Wala pa.
Nandito na, ma'am, sa list. Hi, Doc Marge.
Pag nandiyan na si Doc March, we can start.
Good afternoon. In 2 minutes, we shall start our program. Thank you.
Okay, very good.
Okay, I think it's 6 o'clock. Good afternoon or good evening to each and everyone.
Hello.
It is written in Matthew 18:20 that if 2 or 3 gathered in my name, I shall be in their midst. So we may invite everyone to our community prayer, after which we shall sing Lupang Hinirang.
Lord, let your servant go in peace, for your word has been fulfilled. Lord, let your servant go in peace, for your word has been fulfilled. A child shall be born to the Virgin, and his name shall be called Emmanuel. Lord, let your servant go in peace, for your word has been fulfilled. My own eyes have seen your salvation. servant go in peace, for your word has been fulfilled. The light shall reveal to the nations, and the glory of your people Israel. Your servant go in peace, for your word has been fulfilled. Lord, let your servant go in peace, for your word has been fulfilled.
Together with our personal intentions, we lift them up all to His glories. And the classy intentions of the souls of Dr. Anilab and Dr. Lumagsaw, we all offer this in your name, God. In the name of the Father, and of the Son, and of the Holy Spirit. Amen.
Mga kababayan, ang pambansang awit ng Pilipinas.
Kayang mag-ibig, dalas ng sinakalan, alam ng puso, sa titik mo'y buhay. Lupang hinirang, kuya ka ng magiting, sa manlulupin, di ka pasisigil, sa nagagang tutok sa simoy at sa langit mo pagaw, ay hinatang tulad, awit sa pagkayang minamahal. Ang isang ng matawad mo'y tagumpay na nag-iindig, ang bituin at araw niya kailan ang ay di magtitingin. Luman ang araw ng walhagit pagsinta, buhay langit sa piling mo. Ang inigaya ng barkay mga api, ang mamatay ng dahil sa'yo.
Good afternoon po. To officially welcome us to our discourse and engagement this afternoon, may we call on our lead member of this webinar class group, Dr. Estrelita Punzalan Bautista. Good evening po, Doc.
Good evening to everybody. I think Doc March is here. Is he here?
Yes po.
Yeah. Can we let her give her opening remarks to this particular
No,
webinar?
she will deliver the message po after you.
Okay. Sige po. Actually, we are really happy to have this webinar on global finance strategy. And I'm really delighted that everybody has been very cooperative so that we can hold this in this particular hour together with our professors, Doctors Chona Hernandez and Dr. Noel Hernandez. And of course, our invited speakers, though within a very short time, they are very much happy to share with us their experiences. They are actually financial consultants. They have been working with different banks and different countries. Sir Grino here, our MBA graduate of PCU, has been a consultant to 8 countries in the world. Sir Randy here has also worked in Micronesia and has been a consultant to himself in different institutions and within the Philippines, and has been the VP Finance for big institutions like PLM, PWU, and now he's sharing his experiences to on the World Bank and the Republic of the Philippines financial strategy. To everybody here, whoever is here who actually wants to learn more about the World Bank, I myself, I am not really that good in knowing what's the latest on the World Bank, except to learn that it's all about our debts and more debts of developing countries. Let us welcome here our speakers together with our VP Global Extension of the Philippine Christian University, our VP for Global Extension, Dr. Marge de la Cruz. I'm really happy that within a very short notice too, she is here with us to motivate all our students of PCU, particularly our students in the postdoctoral degree, the pioneer class of school year 2020-2021. Thank you very much. Welcome to this class, Doc Marge.
Thank you so much, Doc Bautista. Indeed, our gathering this afternoon is timely and relevant. And to welcome us all to PCU, may I call on our Vice President for Globalization and Extension Program, Dr. Margie de la Cruz. Good afternoon po, Doc Margie.
Good afternoon.
Good evening na po eh.
Okay, good
Oh,
evening.
good evening na pala.
It's 6 o'clock. Anyway, allow me to greet you all warm Christian greetings of peace and a wonderful evening as well. Thank you, Doc Matt. Thank you, Doc Bautista. To our speakers, friend namin si Sir Randy, no? Sir Randy,
Thank
hi.
you. Hello, ma'am.
Hello. It is indeed
Hello.
a great pleasure and exciting privilege for me to officially open this webinar series of the postdoctoral students pioneer class. Ibig po, sabi na pioneer class, the first class of the postdoctoral students. And of course, Philippine Christian University Transnational Education and Extension Program through the Graduate School of Business and Management Department. We are also very grateful to the administration of PCU, led by our President Dr. Junifen F. Gawan, for the tremendous support he has provided in organizing this postdoctoral program for students who value continuing education and personal academic development. We are fortunate to have our autonomous status extended to us by CHED, as you may have seen from our official pages, and this just proves that PCU continues to deliver quality education even during this time of pandemic. The extension program is timely placed to allow you all to upgrade your credentials and maximize your potentials on these times and highlight your development in the current trends and issues for the graduate program. Especially interesting will be your opportunity to learn the new priorities and progresses in leadership and management, most particular in this period of what may be now referred to as the new normal. As what Proverbs 16:16 says, that having wisdom and understanding is better than having silver or gold. Nice and expensive items can be enjoyable, but there are very few things in life that cannot be taken away, will never go out of style, and that truly make you a better person. And education is one of those things. So without any further ado, as the incoming Vice President for Globalization and Extension Program, let me end this remark with a big appreciation and gratitude to all of you who are participating in this webinar. Strama 831 Global Finance Strategy. Thank you and God bless us all.
Thank you so much,
Thank you.
Dr. Margie, for always
Thank
being here
you,
to
Marge.
support our activities. So we would like to make mention to our participants. We have also here our students of the graduate school and classmates. So we actually have already series of webinar activities, discourses, together with our two vibrant professors, Dr. Noel and Dr. Chona. So we had actually did a lot of engagements also, with invited resource speakers, expert in their field. So we would like to make mention also that our afternoon's event or activity is hopefully not our last, but this is our output, for our course, with in the classes of Dr. Noel and Dr. Chona. And we are so honored that we have here our resource speakers to talk about these financial institutions in terms of global landscape and how Philippines can strategize coping with the expectations and demand, in particular the World Bank. At this point, may I call on Dr. Mark Juan Ablon to introduce to us our first resource speaker. Dr. Mark.
Thank you, Doc Mateo. Good evening, ladies and gentlemen. It is a great pleasure for me to introduce our speaker for today, who is going to talk to us about the World Bank. This is a subject in which we should all be deeply interested because this is timely due to the heavy dependence of the Philippines on debt. Our speaker is a certified public accountant, in business administration candidate at pamantasan ng lungsod ng Maynila, a graduate of Masters in Business Administration at De La Salle University, bachelor's degree in Business Administration, major in accounting at pamantasan ng lungsod ng Maynila. He is presently connected with Universidad de Manila, Finance and Management Consultant to the President. He was previously the Vice President for Finance and Management at PLM, University Controller for PWU, Department Head for School of Accountancy, PWU, Sales and Support Manager for a BPO company. He has also been in private practice as a financial consultant. He was also a finance specialist at Chuuk State Finance Office, Business Computer Department Head at College of Micronesia, Controller at Continental Hotel, Accounting Manager at Benavente Enterprises, Chief Accountant, Safeway, Auditor, SGV, and other consulting jobs as auditor for Xavier High School, Aztec Power Inc., and also a key business lecturer at USDA-sponsored business and accounting workshop for business community at Bino Chuuk. He is an award-winning accountant who has attended a multitude of seminars here and abroad. His illustrious career spanned for almost 4 decades. Ladies and gentlemen, please allow me in welcoming Professor Fernando O. Nunez.
Good afternoon, sir.
So thank you, Dr. Mark, for that kind introduction. Just call me Randy for short. So I've been here in the Philippines for 10 years now, after 20 years working abroad as an overseas Filipino worker. So one of the reasons why we came back here in the Philippines is for our children to take their college degree here. So now they're all professionals. So I'm thinking of going back and pursue other endeavor, like recruiting students in Micronesia for our beloved university, PCU. And I hope that as soon as the lockdown is done in Micronesia, then I'll be the first one to go there from the Philippines. So although they have zero COVID case, still they're trying to protect their small islands by not allowing any incoming flight, only the cargo flight, mostly food and other essential items. So I hope that you will learn something from my presentation, and I welcome you all for this webinar. So before I start, I will be sharing a PowerPoint later on, but just allow me to share a little, funny moment, you know, including this concerning this World Bank. So there was this father. He told his son that I will, or you will marry the girl I choose. That's what the father said to his son. And then the son said, no. And then the father said to him, she is Bill Gates' daughter. Ah, yes, okay. So that's the son said. And then the father called Bill Gates and said, I want your daughter to marry my son. But Bill Gates said, no. Then I told Bill Gates, my son is the CEO of the World Bank. And then Bill Gates said, okay, no problem. So then again, he called the president of the World Bank and asked him to take my son as the CEO. Another one. Then the president of the World Bank said, no. Then the father said to him, my son is Bill Gates' son-in-law. Ah, okay, yes. So there is a political, connotation in there that the World Bank is so powerful that if you're connected, somehow, with World Bank, then people cannot say no to you. Anyway, can I just share my PowerPoint?
Anytime, sir. Anytime.
Okay, thank you. Yeah. Is this okay?
Yes, sir.
Okay. There you go. Okay, so this is what I'm going to discuss this evening is about the World Bank Group, the historical background, then introduce you the five members of the World Bank Group, their projects, their financial statement that probably you'll be surprised, and of course their strategies until 2030 and its conclusion. So please feel free to ask if there are certain question you want to ask. So this is just a picture of the World Bank. It says there that this is the World Bank. Somehow I had pictured it differently. So it's a kind of place where the world, the globe, is inside this cubicle. So I know it's just a funny thing. I just took it. Maybe would be fun to watch. Anyway, so World Bank was established in 1944. I think there's still war, during that time. War was I don't know, ends or ended in 1945. I don't know exactly the date, but it is 1945. But I think the World Bank was established in 1944. So for 70 years, we have seen major changes in the world's economy. That over that time, the World Bank Group, we'll discuss what is this World Bank Group later on. The world's largest development institution has worked to help more than 100 developing countries in transition adjust these changes by offering loans and tailored knowledge and advice. And So the World Bank Group with country governments, the private sectors, these are their affiliates, civil society organization, the regional developments, banks, think tanks, and other international institutions on issues ranging from climate change, conflict, and food security to education, agriculture, finance, and trade. So, as I've said, it was founded in 1944. The International Bank, it was started with this IBRD, or International Bank for Reconstruction and Development, that was soon called World Bank, has expanded to a closely associated group of 5 development institutions. Actually, when this was established, the IBRD, it only loaned to help rebuild countries devastated by World War II. And actually, Philippines was a recipient of this development. However, it was not continued because of our transition from Commonwealth to becoming independent. Anyway, there's a different story, for that. So in time, the focus shifted from reconstruction to development, with heavy emphasis on infrastructure such as dams, electrical grids, irrigation systems, and roads. So with this, the founding, and then come 4 members of the group, the International Finance Corporation. This is we will find out more on this later on, and you will be surprised that this IFC is interested for any private corporation who will be interested to develop to finance their project in developing a certain area in our country. So the institution became able to lend private companies, and we don't know that somehow because we are depending mostly to our local banks. But this IFC uh, will give us better interest than other local banks and financial institution in developing countries. And the founding of another one, the IDA, in 1960. So from 1944, 1956, they have this IFC. In 1960, they have this IDA. This put greater emphasis on the poorest countries. It's part of the steady shift toward the eradication of poverty that's becoming the bank group's primary goal. And then they launched the ICSID, or International Center for Settlement of Investment Disputes. And of course, the next is the Multilateral Investment Guarantee Agency. We'll discuss a little bit more of these 4 groups of 4 members that become the World Bank Group. It's no longer World Bank, but we call them the World Bank Group. Further rounded out the bank's group ability to connect global financial resources to the needs of developing countries. So here is the World Bank Group, 5 institutions, 1 group: IBRD, IDA, IFC, MIGA, and ICSID. Right. So far, we know only one bank, the World Bank, but we don't know that these members of this group will give us an idea if we are a private enterprise, if we are a small government, if we have dispute regarding financial, where to go, and we'll discuss them one by one. So today, the bank group's world touches nearly every sector that is important to fighting poverty, supporting economic growth, and ensuring sustainable gains in the quality of people's lives in developing countries. So while sound project selection and design remain paramount, the bank group recognizes a wide range of factors that are critical to success: effective institutions, sound policies, continuous learning through evaluation and knowledge sharing, partnership, including with the private sectors. So from only government to government, now they are in the private sector. Okay, So the bank group has long-standing relationship with more than 180 member countries. Okay, and it taps this address to address development challenges that are increasingly global on critical issues like climate change, pandemics, of course, and forced migration. The bank group plays a leading role because it is able to convene discussion among its country members and a wide range of partners, can help address crisis while building the foundation for longer term sustainable development. Some, some of my students were asking me, is IMF and World Bank, are they the same? Of course not, World Bank is a bank that give assistance to countries, using their advice or in monetary means, while IMF is a uh, controlling institution in the monetary system of all countries. So some my students were asking, is that the reason why our currency is depreciating? Yes, of course, because we are controlled by IMF. So it's another story, about the depreciation of our currency, the peso. After World War, where I don't know if you remember that $1 is only equivalent to 2 pesos. Of course, Mark grandfather knows that, but you know, some of us we really don't know that unless we research on that particular information. So for over 60 years, from 2 pesos now to almost 50 pesos. So IMF plays a vital role in the depreciation of our peso. But of course, we will be focusing on the World Bank alone. So, so the evolution of the bank group has also been reflected in the diversity of its multidisciplinary staff, who include economists. So everybody, all these multidisciplinary staff that were recruited by the World Bank to work with them. That includes economists, public policy experts, senior experts, and social scientists. And now they are based at headquarters in Washington, D.C. And today, more than a third of staff are based in country office. So one third only in Washington, D.C. Of course, we have here. So a demand for its services has increased over time. So the bank has risen to meet them. For perspective, 1947, they have made only 4 loans, totaling 497 million. 1947, and as 2015, it's now 302 commitments, totaling 60 billion. So later on, we will find out how much we owe the World Bank, the Philippines. So with 189 member countries, staff from more than 170 countries, and offices in over 130 locations, the World Bank Group is a unique global partnership. 5 institutions working for sustainable solutions that reduce poverty and build shared prosperity in developing countries. So you will notice that from 497 million, it rose to 60 billion in 2015. Of course, later on we will know the the country with the highest contributor for this World Bank, and we will see if the interest is reasonable. All right, let's see. Okay. So, for example, the IBRD is a global development cooperative owned by 189 members. We're a part of this. As the largest development bank in the world, it supports the World Bank's group mission by providing loans, guarantees, risk management products, and advisory service to middle income and credit-worthy low-income countries, as well as by coordinating responses to regional and global challenges. So it's a kind of a bank that really will help the developing countries, and we'll see if really it helps, and what happened to those countries that could no longer pay the loan, like the Philippines. Of course, we're still paying, but other countries, let's see what happened. Okay, that's why in 1944 to help Europe rebuild after World War II, and then IBRD joins with IDA, the International Development, then the fund, no, our fund for the poorest countries to form the World Bank. So they work closely with all institutions of the World Bank Group and the public and private sectors in developing countries. Number one, to reduce poverty and build shared prosperity. Maybe later on you will be asking why most of the loans were given to African nation, and yet Africa is still underdeveloped. It says that the IBRD is only partner to middle income countries, which is true because above all, IBRD ensure the progress in reducing poverty and broadening prosperity can be sustained. It places special emphasis on supporting lower middle income countries as they move up the economic chain, graduating from IDA to become clients of IBRD. So IDA actually is focusing on the poorest countries in the world. And normally, their term is normally up to 40, 50 years. And then somehow along the way, these countries who borrowed money from IDA could not pay their, their loans. Then what happened? Then there will be a debt relief. Let's see what will happen. And then those countries that were able to pay their loan and they want more of this loan, then they will go to IBRD. So somehow the IDA is giving small loans and the IBRD is much higher loans provided to requesting country. It is also expanding capacity to help countries dealing with fragility and conflict situation. And as a long-term partner, IBRD step up its support to all middle-income countries in time of crisis. So we'll see what assistance IBRD was given to us during the time of this crisis, the COVID-19. We will find out later. So this is the recent projects in the Philippines. Okay, 600 million promoting competitiveness and enhancing resilience to natural disaster development policy loan. It supports the transformational reforms to hasten the adoption of digital technologies. Ayan, digital technologies. You may be observed that the 5G is part of this project subsidized by this 600 million loan, and so that it can promote greater competition, reduce the cost of doing business, to revive more economic activities and jobs in the country. So I don't know if you heard the 600 million given to us in November, I think 2020. And of course, this will help small and medium enterprise bounce back from the pandemic. They help citizens cope with social distancing measure and other health protocols, and improve delivery of social assistance to the most disadvantaged groups in society. So in here, I give you the link. This is how the process of obtaining loan from the IBRD, flexible loan, the requirements, and other things that you may want to know how the Philippines was able to obtain that much, and what other requirements World Bank need from them aside from the requirement of their capacity to pay regarding their per capita. So everything will be on that link. So if you want to read more about how they able uh, to pay and what will be the terms and everything, it's all in there. So see, this 600 million is another another project that highlighted is the National ID Program for Financial Inclusion and Social Transfer Program Delivery. So that national ID is financed by this 600 million loan from the World Bank. I don't know if some of you have already undergone this national ID program. So we already have it and just awaiting for the ID itself. They say that they will release this month of July. So everybody actually are enjoying to have this national ID. The only ID that you can present will be accepted anywhere. So the other one is this 300 million. So can you imagine in less than a year we have 900 million loan from the World Bank. This is used for the to help address poverty, of course, in poor rural communities. So this additional funding will provide grants to finance community identified and community managed responses that restore or improve basic social services to address the impact of this COVID-19 pandemic and other disasters which have disproportionately affected the poorest and most vulnerable municipalities. So Taal actually, Taal residents, the Taal itself is one of the recipients of this fund, of this loan. So you might be asking, are there more money left yet, or they already spent it? That we have to go uh, to the Department of Finance, headed by Mr. Sunny. Okay, these are some of the projects actually in other parts of the world. The India for rooftop solar, the Peru, the agricultural performance, and China, rural migrants. So skills development. So we might be asking ourselves why China is still borrowing money from the World Bank, where in fact, when I was in Micronesia, they lend Micronesia about 2 billion dollars for the next 5 years. And Micronesia's loan from World Bank is around 500, 500, no, it's about $5 million. Just, and I asked why. It's a matter of giving World Bank the proposals. The World Bank will not come if they're not invited to our country. So they invited more people from China than invited the World Bank. That's in Micronesia. So in turn, China, because they have this interest on their marine resources, gave them 2 billion for the next 5 years. And to develop their marine resources, World Bank gave them only about 500,000 or $5 million in order to develop their marine resources. Somehow, I don't know. It's politics that sometimes we cannot comprehend. So this IDA now is part of the World Bank, the second group, the second member of the group that helped the world's poorest countries, overseen by 173 shareholder nations. The IDA aims to reduce poverty by providing zero to low interest loans called credit. So somehow it became grant for program that boosts economic growth, reduce inequalities, and improve living conditions. So if a country will, let's say, borrow 500 million, then the other group or the other member of the group, which is IDA, if it is a grant, it will not be more than $100,000. So, somehow this grant are just part of the interest collected by the World Bank and use it, for the poorest country for their small projects. So, bumabalik lang. So, IDA complements the World Bank original lending arm, the IBRD. The IBRD was established to function as a self-sustaining business and provide loans and advice to middle-income and credit-worthy poor countries. So IBRD and ID share same staff and headquarters, and evaluate projects with same rigorous standards. So in other words, the IBRD and IDA are providing loans to middle-income countries or poor countries. So, of course, when you're providing loans, normally there is an interest attached to it, and of course the terms will be more than what local banks or other countries can give or can provide, and normally the term will be about 20 to 40 years, and there is a grace period of 5 years. No other banks could give that, locally or foreign. So this is the only bank that provide this kind of terms to countries, to willing countries. Okay, and then the IDA credits have a zero, very low interest, and repayments are stretched over 30 to 40 years, including a 5 to 10-year grace period. Ang problema niyan, during the 10-year period, when they provide loans to African nations, 5 years lang, wala na. It's not a sustaining, and the projects are gone, and they were not able to pay the loan. So, of course, that is one of the, of course, the risks of providing loans to these poor countries. So they have also concessional loans and grants, and of course provide significant levels of debt relief. This is what I was saying, that most debt relief are only applied to African nations through the heavily indebted poor countries, HIPC initiative, and multilateral debt relief initiative. So, yan, ito yung mga nirelief nila, countries with debt relief. Can you see that? I was looking at the Philippines, but of course, we applied for debt relief, at least 20 to 30% of our loan, but it was denied by the World Bank because they knew that we have the capability to pay them. But these nations, mostly from African nations, as the World Bank says, don't have the ability to pay the loans. So in 2020, the latest debt relief was amounting to $71 billion. And how much is our liability to World Bank? Actually, to World Bank is only about, you won't believe, it's only $20 billion. But we owe to other countries. But World Bank is $20 billion. So we're asking 20% debt relief. The World Bank says no, because we can pay according to them. Well, we'll see. So this is the other IDA project. One of them in Burkina Faso in Africa, child care, the COVID-19, fighting coronavirus in African nations too, and of course other outbreak. So IDA mostly are assisting the poorest countries, normally in Africa. So now this IFC, this is probably will be an interest to private companies, especially if you're looking for a loan that will give you a lower interest and with years of grace period. So IFC is created. A strong and engaged private sector is indispensable, ending extreme poverty and boosting shared prosperity. This is where IFC comes in, or the International Finance Corporation, where it has more than 60 years of experience in unlocking private investment, creating market and opportunities where they needed most. So since 1956, IFC has leveraged 2.6 billion in capital to deliver more than 280 billion in financing for business in developing countries. So this one, the IBRD and IDA is, or they are focusing to countries, while IFC is focusing to private entrepreneur or private corporation. And I don't know that actually. When I learned that San Miguel is a recipient of this, why San Miguel was able to build this skyway, it's not their own, let's say, retained earnings out of the corporate earnings, but it's more on the, these loans provided by IFC for long term. So we don't know what are the other terms of contract they have, but San Miguel Corporation is a recipient of this. But of course, it goes through the government, but it is initiated by the corporation itself. So more of this agribusiness and forestry, education, financial institution, funds, health, infrastructure, manufacturing, public-private partnership, which is partnership of San Miguel and of course the country. This is something to do with this agreement that after certain years it will be turned over to the Philippine government. Of course, after 20 years or 30 years, and it's a good thing because San Miguel initiated this skyway, and hopefully it will continue to finance projects not only in Metro Manila but in other parts of the country. So if you want to borrow, if you want to know more about this IFC, how to borrow, how to make a proposal, and this is the link where you can find all these necessary requirements in order to, to probably to loan from IFC. Actually, there are several recipient locally by IFC, and of course, we don't know their contract because it's not written there in this link. It only says who are or what companies in the Philippines receive this loan from IFC. So it's one way because if IBRD and IDA are lending money with a small interest, about 1 point something interest a year, IFC is around 3% to 5%, but grace period of 5 years. So what more you can ask? This is a better deal than dealing with our local banks or foreign private banks. So these are part of the loan requirements actually, just part of the total terms. To be eligible for IFC funding, project must meet a number of criteria. The project must be located in a developing country, which is a member of IFC, should be in the private sector, be technically sound, have good prospects of being profitable, benefit the local economy, and be environmentally and socially sound, satisfying our environmental and social standards as well as those of the host country. So Skyway is a kind of project that meet all these criteria by IFC. So there are more, mostly on the countryside, in the rural part of the country. And I don't know how it will be delivered, but right now it's in process that the Philippines are getting more recipients of this IFC funding or loans. All right. Now, another group is MIGA, or Multilateral Investment Guarantee, promote foreign direct investment into developing countries to support economic growth. That was in 1988, reduce poverty and improve people's life. Of course, they are interconnected, the objective of the World Bank. But MIGA fulfills this mandate by offering political risk insurance or guarantees so to investors and lenders. So there are several lenders, private lenders. Of course, I don't know if you heard the the term SBLA or standby letter of credit, SBLC, the MT-103, MT-1110. These are some of the documents provided by the investors, and they want a guarantee, a political risk that when they invested it on a host country, in a host country, then there will be no political interference or intervention, and MIGA will be the one to guarantee that your investment will be smooth in the sense that there will be no political intervention that will affect your interest in that country. So it protects investment against non-commercial risk and can help investors obtain access to funding sources with improved financial terms and conditions. So there was a time I was part of the of this group preparing the feasibility study in a Fuga Island. I don't know if you know that Fuga Island somewhere in the north. Uh, that Fuga Island is a big land. It's a virgin forest trying to be developed by the local, by the local residents, headed by their mayor or governor. So I uh, was one of the member of the group assigned to do the study. And we have these investors from Malaysia who came down here several times and went there. Although I don't have time to go there, I was not invited to go there. And I don't want to go there using the six passenger plane. What part is that, Puga? Anyway, so what happened? The uh, the loan was approved. However, the investor wanted MIGA to do the guarantee that this loan will be protected. It's about uh, it's about 1 or 2 billion dollars using the standby letter of credits from Malaysian banks, Malaysian investors. And then I don't know, it lasted for more than a year and it's just died down. I don't know what happened. I asked the that was 5 years ago, and every year I ask the status, what happened to this investment, to this project, and I haven't heard. I don't know. Still asking what happened, but this is supposed to be guaranteed by MIGA, but I don't know, for some reason Malaysian did not push through that investment. And of course, the last group was this EXID. This is the International Center for Settlement of Investment Dispute. Right. So this is just like the DOLE arbitration. So if there are investment provided by foreign countries and it is actually guaranteed by the World Bank through this MIGA, and yet it created conflict among the parties, then ICSID will intervene to become the arbitrator between these two protagonists. So there will be arbitration and conciliation. So this ICSID is merely the the problem solver among the conflict parties. Now let's see the this is will be an interest to you. Let's see the contributors for 2020. Germany. Germany is the number one contributor for the past 2 years, 2019 and 2020, with 900 millions. 900 millions. Of course, UK, United Kingdom, United States, Norway, Japan, Canada, Europe. So Japan is the only country that provide a huge contribution. The money that contributed by these nations actually are free money without expecting an interest. So it is just their contributions provided by these donor countries. So there was a time that U.S. was threatening the World Bank that they will not give their contribution in 2020 because of certain political, I don't know. So far in 2020, you'll see that there were 6 billion, amounting 6 billion contribution. And of course, other sovereign donors, this country. So in 2020, I think there was 11 billion donations as compared to 2019 of almost 10 billion. So 10 billion, it's a lot of money. So in the past, it's averaging about 7 billions a year from these donor countries. It's a lot of money. So that's why you won't be surprised how much the president of World Bank received. It received about $200,000 a month as salary, the president. I'll show you later on the organizational chart. Okay, so let's see their fund balance. Actually, their statement is receipts and disbursement and fund balance. Why? Because they're using modified cash. When you say modified cash, they will not consider if you will just pledge. If a donor counter says, I will pledge 1 million, they will not record that until it is received. That is the modified cash system of accounting, actually. So these are all cash. See the contribution, 11 billion. And then the income from their investment is 484 million in a year. Can you imagine, just in a year, World Bank is receiving 484. Okay, and they spend the project about 9 billion. So they still have a balance of about end of the period of 22 billion. So that's a lot of money. Imagine that, 11 billion a year, and you have excess money of 22 billion a year. So it's a big bank. So let's see. So these are their commitments to the Philippines. Okay, so in what year is this? Year 2020, they committed 1.8 billion. So this year, they already gave about 2 billion, almost 1 billion. So they're committing to spend or to give or provide Philippines about 3 billion more. It's a lot of money, huh? So let's see. That's your commitments. These are the interests. Okay, let me tell you about the interest. This is LIBOR, this London interbank interest rate, plus 53%. So normally our term is 18 to 20 years. So this is what they charge. It's about, LIBOR is about 0.50. So about 1.83. Let's see how it is computed. There you go. Let's see. Supposing we loan, our principal loan is 500 million or 500 million. And this is the charges they made. It's a front end fee. This is a front-end fee. We call it here a processing fee of 0.25%. That's already 1.25 million. And then the commitment fee, whether you take the money or not, they will deduct 1.2 million. So that's already 2.5 million, okay, deduction from your 500 million loan. So the net proceeds will be 497 and will be given 5 years grace period, meaning that we will pay after 5 years. And the annual interest for 20 years is LIBOR of 2.508 plus the plus 1.23. So the interest a year is 1.48. So we're paying 7 million a year of interest. Yeah. Do you know who's the only president that pays more money of our obligation? It's only Pinoy, Pinoy Aquino. It's paid almost half of our loan to World Bank. So, kailangan bayaran yan. We cannot really expect that we will be having a debt relief from this World Bank. No way. No way. Sabi ko nga kay Sir Doc Val, we have so many reserve golds, around the world. It's more than enough to pay our loan. So definitely, World Bank will not condone or will not, write off our loans with them. So this is our public debt, Philippines. Our public debts, actually, as of 2020 fourth quarter, December, is 2.5 trillion. Laki, no? Sabi nga natin, kahit mga apo-apo natin, hindi pa kayang bayaran yan. But this is not what we owe to World Bank. Our domestic is about, maliit na lang, as of quarter is about 90 billion. But the foreign is about $10 billion. Lumaki siya nung 35 billion nung January 2021. So nababayaran na siya. See? Marami nagsasabi, hindi raw tayo nagbabayad ng utang. But look at that. January 2021, we owe 35 billion. But on May 2021, look at this now. It's 10 billion. So marami na rin tayo nabayaran. Kaya hindi na tayo maraming utang sa World Bank. Anyway. So what are these? The World Bank Group strategies. So the World Bank Group now has developed a new strategy focusing on the ambitious goals of ending extreme poverty and promoting shared prosperity. It is their strategy since the beginning, but now they're committed to helping countries reach these goals in a sustainable manner. So the new strategy is the first encompassing all four principal agencies working together as one World Bank Group: the IBRD, the IDA, the IFC, and the MIGA. So the strategy lays out how the World Bank Group will reposition itself based on a value proposition to best serve the development community in pursuit of the two goals. So right now, the World Bank has what the critics are saying, that they are favoring countries over other countries, but I don't think so. If they're favoring other countries than other countries, why they have a debt relief of this African nation? About 71 billion. That's too much. So that's the World Bank Group now will focus on customized development solution and align all its activities with two goals: work more in partnership with others, including the private sectors. So they are going to work with private sectors, not the government itself, but the private sector that will be endorsed by the government to make sure that the projects will be completed in due time. We have so many projects, that the government is handling in the past, and it was kind of delayed because instead of completing it in 3 years' time or 2 years' time or 4 years' time, it was delayed by probably 2 or 3 years. And you know how government works. And of course, it's more on corruption, as we heard. But now they're focusing to include majority of the private sectors who will initiate the project for the government, or the government and the private sector will work together and establish what project will be feasible for our countries, and they work together, and then these two together will meet the World Bank to uh, to make sure that the that the project, as I've said, will be completed in due time. So and significantly increase their collaboration. Okay, the implementation of this strategy will require organizational change and a new framework for medium-term financial sustainability to ensure that the World Bank Group resources are commensurate with its responsibilities on behalf of the international community. So the more private sectors will be involved in any government projects, including the provision of the loans from the start, that the loan was given to the government, and it will definitely be given to the private sectors to, you know, to do the project. Then there will be transparency. Why? Because before, when there is a project by the government, money goes to the government directly. For example, 500 million goes to the government of the Philippines. And then the Philippines will be looking for a private contractor who will be spearheading the project of his government. So that 500 million becomes 300 million on the part of the contractor. And as far as paper is concerned, that full amount goes to the project. So magkano ng cut? That's 200 million. So it's kind of ano, it's widespread that finally World Bank realized the corruption of any government, especially on the developing countries like the Philippines, of course. So they decided to involve the private sector, majority of the private sectors, to do the project from the beginning. From the beginning, that the money is transmitted to the Philippine government, and eventually the spending of this money to the project. So in that case, if the corruption will not be eradicated, at least it will be, it will be reduced to a certain level, maybe acceptable to the World Bank. But as I've said, money could be easily paid off if the full amount will be given to the certain project that will is tantamount to generating profit. So the once translated into action, the strategy will reinforce the World Bank's group role as the world's unique global development institution that helps affect transformational change for nearly 4 billion people. 4 billion people is still living in or close to the edge of extreme poverty. So hopefully, we'll pray that this, will be able to achieve. So at the heart of the new strategy are the two goals endorsed by the World Bank's Group Boards of Governors at the 2013 spring meeting: to end extreme poverty, reduce the percentage of people living on less than $1.25 a day. Meron pa yan sa Africa, 125 a day, to 3% by 2030. Or maybe it's $3, not percent, by 2030. So still at least a progress. And to promote shared prosperity, foster income growth for the bottom 40% of the population in every developing country. So we accept it or not, there's still 40% of our population are below the or within the poverty line. So fighting poverty has always been a central mission of the World Bank Group. So as a new element, the two goals add concrete measurable dimension to the fight against poverty. Just as important, the goal of shared prosperity reflects the aspiration for rapid, sustained, and inclusive increases in our living standards. So working with all its partners, the World Bank will pursue the goals in ways that sustainably secure the future of the planet and its resources, promote social inclusion, and limit the economic burdens the future generation inherit. So, so that's why it's World Bank is committed to mobilizing the international community to the urgent task of achieving the goals. These goals can be reached only through the collaboration of all international partners, including countries, other institutions, civil society, and more on the private sectors. So our conclusion then now is the opportunity to achieve the two goals is very historic and will require bold steps by all stakeholders. So I hope that the government, the host country, will really accept this strategy. And the World Bank Group faces significant risks to delivering on its commitment to promote sustainable achievement of the two goals, particularly if it falters in implementing the action identified in the strategy. So management must adhere to its commitment to focusing relentlessly on the goals. So that's why lately during the G8 meeting, of course, the main contributors of the World Bank and the bold steps taken by all these stakeholders and hopefully will be acceptable by the host countries, especially the developing countries, Philippines particularly, on how they were able to do this. It's up to the administration. So right now, we hope and pray that this will be achieved so that prosperity will be an arm's length for the Philippine for the Philippines and other developing countries. So each member government and the international community as a whole must demonstrate the political will. There you go, the political will again, to focus on the poor and disadvantaged and to act in partnership with the private sector and civil society. So together, as they said, we can do what it takes to end poverty and build shared prosperity in a sustainable manner, not in some distant future, but in our time. So that ends my presentation, and I hope that you're able to learn from the World Bank strategy. And if you have any question, please feel free to ask. And I hope I could be able to answer your question, sir.
Thank you so much, Prof. Randy. There will be a dedicated time for open forum later. I
Yes,
think
sir.
Dr. Sabala is consolidating some questions written in our chat box intended for the open forum.
Okay, okay, sir.
Okay,
Thank
you so
you.
much. Okay.
Thank you.
Can I share my screen now?
Thank you for listening. That is fast. Thank you.
Doc Mateo, you're muted.
Sorry. Professor Randy, there are questions written in our chat box. So we will have an intended portion on open forum. This will be moderated by Dr. Zabala later on. So
Okay.
we hope that you still have time. No, you just have
Yes,
to
sir.
relax a bit, and then we shall have our open forum later. Thank you so much.
Okay.
At this
Thank
point,
you.
may I call on again our lead group member, Dr. Butch Bautista, to read the citation for our certificate of appreciation to our resource speaker. Dr.
Okay.
Bautista.
The Philippine Christian University, the Certificate of Appreciation is awarded to Professor Fernando Nunez, CPA, for his invaluable insights as resource speaker during the webinar discourse session for the postdoctorate course Strama 831 Global Finance Strategy, given this 10th day of July 2021, Manila, Philippines, signed by our two professors, Dr. Chona Hernandez and Dr. Noel Hernandez.
Thank you so much.
Thank you.
Congratulations po.
Thank you. Appreciate that.
Now, may I call on General Dr. Nabua to introduce our second resource speaker. Doc Yolio.
Salamin. Wala dito iba.
Yes, go ahead, Dr. Nabua.
Wait lang. Good evening, doctors, classmates. Our speaker, this next speaker is a professor from prominent I'm sorry, I'm still driving. I just stopped for a while. And to make it short, our next speaker is no other than Professor Enrico Grino Jr. He is from Global Education he was a global educator from different school and well experienced professor who shared and proposed so many professors from different schools. So let us welcome our Professor Enrico Grino Jr.
Thank you so much. Thank you so much, General. Good afternoon, Professor Enrico.
Good afternoon.
Okay, you can share now your screen. And
Actually, if you could just put me on the camera, because
no
I'm
problem, sir.
to deliver extemporaneously.
Okay.
I really thank Professor Nunez for being able to extensively and comprehensively explain to us the background, the nature, the history, and the activities of the World Bank. Now, my original presentation, I didn't know that there were two presenters, was almost overlapping and the same. But I thank Professor Nunez because he did an excellent job, which I probably couldn't have done because I'm not a techie. So he has a very nice and very comprehensive technical presentation. Can you see me? Can you put me on the camera so it will be better?
Yeah, you're here.
Yeah, we can see
Okay,
you, sir.
good. So thank you very much. To start, good evening, everybody. I am really honored to be here to be able to present to you my actual experiences with the various international transactions. Just to clarify, Actually, not bragging. I really only started teaching 2 years ago after I retired. I actually worked more than 40 years abroad. And as mentioned earlier by Dr. Bautista, I actually worked in more than 8 countries. And my head office was, of course, in various international capitals of the world. Therefore, I was able to directly be involved in many of the types of financing transactions that we are talking about. So I'm very thankful to Professor Nunez for being able to explain and give all of you an overview and a background of what the World Bank is doing. So what I intend to do is actually to run through many of the various types of transactions that the World Bank and in practicality, all international institutions also practice these types of transactions. I will run you through the details, overview details, and processes involved so that you will understand how the financial institutions do provide these products and services to the customers. So as a disclaimer, I will have to tell you that my eyes are bad. So once in a while, I will have to look at my notes with the help of a magnifying glass. But anyway, going through, thank you for the history, Dr. Nunez of the World Bank. I don't have to go through it, but basically, just as a reminder, the World Bank was established in 1945 during the Bretton Woods Conference in the US, which actually was attended and arranged by 44 allied nations after World War II. And the basic premise or the basic objective of the conference was to discuss the current issues, the global issues and challenges of the world post-World War II, which meant that during that time, don't forget World War II ended, I think, 44 or 45. So this was definitely right after World War II, when most of the major cities in Europe and in Asia were devastated by the World War through bombings and wars, etc. And naturally, the economies of the world were in shambles. So the 44 nations came together to establish two institutions. One was the IMF, which is now the leading institution that puts together the framework and the standard principles that runs the financial markets and the international markets. Basically, during that time, they had the Bretton Woods Agreement, which agreed on the exchange rate, which will be stabilized by the IMF, the Bretton Woods system, and the second one was the Bretton Woods Agreement, where the currency will be pegged by the gold standard. So basically, that was the first institution. And of course, the second institution, which is the topic of our discussions today, is the World Bank. The World Bank, as you know, was initially created as the RDRD, International Reconstruction Development Bank, or anyway, RDRD. So basically, it was instituted in order to finance the reconstruction of war-torn Europe and Asia. After, so about 10 or 15 years, of course, the reconstruction of most of the European countries in Japan and Asia were already completed. Excuse me. In 1980, they established the IDA, which Professor Nunez already talked about, where they shifted their development strategy towards the developing nations, and particularly the IDA, as mentioned before, is focused on the very poorest nations of the world. So that's the recap of the history of the World Bank. So basically, let's start again, just a recap of the mission, so that when I explain to you the various transactions, I won't have to mention what the objective is, what the rationale is for lending, why do they do it, etc. So again, as Professor Nunez very competently and comprehensively explained, the mission of the World Bank is basically to end poverty by 2030 and to promote prosperity of the world's poorest nations, basically 40% of the population of each country. So remember those two underlying reasons. Everything that the World Bank will do and does at the moment adheres to these principles. So again, and what are the vehicles for the World Bank to institute and execute this mission statement? Again, there are 5 organizations under the World Bank Group. The RBRD and the IDA are basically the World Bank.
Yes, sir.
The RBRD, as I said, or as Professor Nunez said, is basically providing services, financing, investments, advisory, research to all member countries. Okay, that is the policy. Now, through that, they are focusing on various segments of the economy and the world. The IDA focuses, as mentioned, to the poorest of the nations. The IFC, International Finance Corporation, which was established later on, is focused on the private sector, both internationally mostly in developing, underdeveloped, and poor countries. And then we have the MIGA, which is basically supporting all the activities of the RBID, the IDA, and the IFC, which I will explain later on. But the MIGA does not provide direct investment or funding. It provides guarantees and political risk insurance, which I will explain later. And of course, the last is basically a support or vehicle for which to ensure that the global community would adhere to the proper principles and practices and norms of investment. So therefore, if there are any disputes, the World Bank has a center for disputes which focus primarily on disputes concerning investors and investees. These cover both private sector and international communities or governments. Okay. So I already mentioned the objectives, but again, I will thank Professor Nunez since he already mentioned the priorities of the World Bank. Now, if you remember the slide of Professor Nunez on the focus of IFC, that is basically where my transactional experience is. I have been working abroad since 1980 in 8 countries. And of course, I have been directly involved in many of the transactions of IFC. Of course, I didn't work for the government, but I am aware of the many projects of the government. And again, I am very thankful for the background that Professor Nunez has given on the various types of projects that the World Bank Group is doing in the world, because these basically are what the types of transactions I'm going to explain to you now. But I would just want to repeat some of the important areas of focus of the World Bank, which of course, as mentioned, the RBRD, the IDA focuses on governments, the IFC and MIGA focus on both governments and private sectors. Okay, so as mentioned, if you will remember, we talked about infrastructure, San Miguel, etc. That is one of the major focuses, but it is not the only one. If you remember the mission, it is to promote and encourage the prosperity of the global economy and all the countries. So therefore, just to mention agriculture, education, private equity, health, financial institutions, PPP, and many others. If you remember the list, I won't go through it. But just to mention some of them for you, financial institutions is where I'm going to focus now because this covers a lot of things. But just to mention to you, the World Bank works with the major financial institutions of the world in order to support the economic development, of course, and to uplift the human conditions of the people. Basically, the caveat is the World Bank will support the financing activities provided it is within the mandate. Okay, the World Bank has a certain list of policies and priorities which is clearly written down, and there are eligibility requirements. So if you meet the criteria of the area of focus or activity, which I mentioned earlier, health, agribusiness, infrastructure, IT, etc., you will be able to at least arrange a facility or request for a facility. The second is eligibility. Of course, we all know you can only request for facilities if you are a member of the IMF. That is the prerequisite for any World Bank requirements. To be a member of the World Bank, any of the RBRD, IFC, etc., the condition is you have to be first a member of IMF. So the second criteria is particularly for the purpose. As I mentioned, the RBRD and the IDA focus on governments. So therefore, the loans and financing given to the governments are practically based on policy. They call these policy loans. So therefore, they may or they may not be financially viable. The countries that they lend to may or not be creditworthy. However, because of the policy, which again falls back to the two basic principles and goals of the World Bank, they will provide facilities. And as rightly said by Professor Nunez, the feasibility and the due diligence is not as comprehensive and complex as the private sector for RBID and IDA because it is a policy loan. Okay, policy loan is if you meet the criteria, if you really need it, if you're a poor country, we will give you these facilities, particularly for IDA, at very low concessionary rates or some even free. Okay. Now, on the contrary, for IFC and for MIGA, it is very, very comprehensively studied. IFC and MIGA support projects and financing activities and investment activities on an arm's length business-like transactions, meaning to say they will not support projects that are not economically feasible or do not have a logically, commercially, and economically viable transaction. So which means if you go or work with IFC or MIGA, you will be extensively scrutinized, and due diligence process is very tedious. This is my experience, but as I said, all the projects have to be on an arm's length, business-like profit basis, and not on a policy basis like RBRD and IDA. Through that, as a background, I will now shift to certain types, the generic types of transactions that the World Bank through IFC and MIGA and RBRD or any of them will provide based on existing financial norms. Basically, as you know, since you're all PhD graduates, there are two basic types of financing. The first one is credit. The first one is capital financing or equity financing. Okay. The second is debt financing. Now, going through that, the World Bank Group does actually the two types. The first type is equity financing, which is the raising of direct investments to projects. So you have equity financing, you have venture capital, you have private-public participations, and you have funds pooling and mobilization of capital from various investors.
Yes.
So these are the types of transactions that the World Bank will do. Now, just as a very quick overview, because we don't have a lot of time, capital financing will entail the same kind of credit scrutiny and due diligence process, i.e. financial analysis, project feasibility, cash flows, projected cash flows, ratios, etc., everything we learned about in MBA and PhD on the 5 C's of credit. They have to do it for both capital in equity financing and debt financing. The process is the same. The only difference is that if it's an equity financing, the World Bank Group entity will be a direct investor. They will put in capital in the project and they will be a shareholder of that project. The second, of course, the debt financing is that they will lend money to the project and or the country or the entity, etc., and they expect to be paid back. Now, the difference is that as Professor Nunez explained, the terms and conditions are different. Okay, the IDA provides soft loans, low interest, long-term tenors, etc., to really help the country in order for them to improve their economic and financial stability and growth. Now, the IFC and the MIGA are transactional basis. They will support projects. Of course, they have to meet the criteria of the mission and vision of World Bank, but they will support projects based on the feasibility and economic bankability of the project itself. So if the project has a projected cash flow, for example, of 20 years repayment based on the debt service ratio or debt service cover ratio, which means the cash flow can pay the debt in 5 years, the tenor will be 5 years. If the debt service ratio says it will be paid in 20 years, the tenor will be 20 years. So that's the main difference. It is really based on economic and financial viability of the project to repay the debt, okay? So those are the two underlying principles of providing financing. Now, going through the debt financing. So equity financing is very easy. They will inject capital. For debt financing, it is based on several types of facilities. Direct lending, of course, will be, as I said, they will lend facilities or loans based on the needs of the country for RBID and IDA. And second, based on the feasibility and requirements and conditions of the project or company for IFC and MIGA, okay? Now, there are basically two types of financing. There is the bilateral financing, which means bilateral means one lender, then therefore it will either be one of the World Bank organizations lending directly to one project or one country, or it will be a syndicated facility. A syndicated facility means there are two or more lenders. So therefore, the IFC will arrange a loan, but because of the size of the facility or maybe because of political and economic commercial interests, they want to invite other investors or other banks to participate in the loan. That is called a syndicated facility. The second type of facility, of course, is the project finance facility, which is project finance is the type of facility that is a self-contained standalone facility which is non-recourse, which means that the borrower of the lender is an SPV, so it's an off-balance sheet transaction, and the premise or the objective of the transaction is to finance this project on a standalone basis because the project has the financial capacity and the feasibility to repay the loan from its own cash flow generated by the project. So therefore, it is a non-recourse because it will not fall back to the investor. Okay, we're talking about investment. Sorry, you're talking about private investment. So the next one is indirect lending. Indirect lending is not providing for funds. So this is where the MIGA will come in play. MIGA supports a lot of the projects of the World Bank by providing guarantees and providing political risk insurance. This was very articulately explained by Professor Nunez. But again, guarantees come in a lot of forms, standby LCs, commitment letters, etc. But the underlying reason or logic is that when investors or other banks provide facilities to local companies, excuse me, particularly in underdeveloped or developing countries, they do it on a feasibility project basis, based on cash flow, based on feasibility, based on market environmental capacity and repayment terms, etc. But the lenders cannot be assured that the political stability of the country will not adversely affect the returns or may create losses to the project. So therefore, they would require the borrowers or the private investors, even the government owning the project or borrowing, to have guarantees from MIGA to protect them or mitigate the risk from political risk. We all know what political risks are. Risks are any event or activity that will cause instability of the government based on government policy, based on war, based on change of regulation, etc., that will affect the project negatively or and will cause loss to the project owner. So these are risks, geopolitical risks that is not in the control of the borrower. So therefore, this is the main reason why MIGA is there, because they would encourage and support private investments of particularly foreign shareholders going into underdeveloped or poor countries. They would assure them that, okay, if you finance projects that are feasible economically, they have good cash flows, they have good business dynamics, but you are not sure that the government is stable or the government will not do something that will adversely affect the business, then we will give you a guarantee or political risk insurance in order for you to be comfortable that you are assessing the investment on a arm's length, business-like, profit-oriented basis without any hesitation or concern of any government intervention, government problem, war, terrorism, etc. So that is the basic premise of the MIGA function. Okay.
Yes.
So it's very clear. Both IFC and MIGA go into transactions on business-like transactional basis on commercial terms. That's the other thing that I will stress to you. I have worked a lot with IFC, and the difference between IDA and IFC is that IDA will give preferential loans. They will sometimes give free loans because of policy, but IFC is always commercial conditions, okay? So they will compete with other banks. So just as a practical or real example, when I was in Indonesia, I was the chief credit officer and a board member of one of the, in fact, of the biggest and most creditworthy bank in the Middle East. We had a bank in Indonesia. I was assigned there as the country representative, and of course the chief credit officer, because I had to control the purse strings and the credit. But I also was able to negotiate a loan with the IFC because basically the banks need, even though you are a very good bank, even we were a AA rated bank, we were very liquid, we were the biggest bank in the Middle East, a lot of money. But as you know, the ratio analysis of banks will have to have a certain amount of the funding in long-term stable loans, which is quasi-capital. Basically, we had a lot of support from the head office, but we still had to go through a lot of due diligence and prove to IFC that we were a very competent and self-supporting bank, and we could repay the loan based on the own merits of the bank in Indonesia rather than being guaranteed by the head office. Of course, bigger than all the banks combined in the Philippines, modesty aside. That's the bank I work for. But having said that, we got the loan. But one thing that I will explain to you and what you have to understand, there is no free breakfast. The loans and facilities given by the World Bank Group, in particularly IFC, to private individuals or private financial institutions have a caveat or a condition. You must be able to prove that you are meeting the requirements of the mission and vision of the World Bank, which means alleviating poverty and promoting economic growth and viability of the particular economy or country that you are engaged or based in. So having said that, what were the terms and conditions? The IFC required our bank to have at least 20% of our loan portfolio to be lent to micro industries or SMEs, which means we had to prove to them through quarterly reporting that our loan portfolio, 20% of the loan portfolio was being lent to small micro companies and SME because, as you know, through our marketing and economic subjects before that, these are the standard bearers or the foundations of all economies. And basically, they drive the economy. So the growth and prosperity of microeconomic industries and SMEs will eventually grow the economies on a grassroots basis. And of course, this will be later on graduated to corporations, etc., which they have no problem because corporations and big companies have no problem borrowing from banks as long as they're creditworthy. Micro companies and the SMEs need to be supported and encouraged by the World Bank. Therefore, the condition for lending to financial institutions is that we will lend you money on a commercial basis. However, you need to support the economy. Okay, so that is the underlying premise of lending of IFC. So again, going through project finance, Project finance, as I mentioned earlier, has two facets. It needs to be a standalone basis. And so when countries or companies need to finance projects, for example, the superhighway, energy plant, water treatment, environmental waste protection, etc., these projects are eligible for World Bank financing. However, if it is a private sector endeavor or initiative, as Professor Nunez said, they have to make the whole feasibility study. They have to make all the financial projections. They need to make all the financial requirements and conditions to prove that they are a feasible and creditworthy company before being lent to or being guaranteed by the World Bank companies. So basically, they need to be a standalone and they need to prove that they will be able to repay. So this is the basic premise of the IFC and the MIGA. Now, simulations, as I said, the process is that IFC, for one reason or another, will not want to finance the whole mega project, and they would like to other banks, other financial institutions to participate. But they will be the arranger and transaction manager. So they will be able to have invite other banks, mainly large development banks in the country or other countries, Citibank, etc., and here in the Philippines, Development Bank of the Philippines, etc., in order to finance this development project that will meet the criteria of World Bank. And they will put together this syndicated members to lend the project itself. But the characteristics of syndication is that there are two or more lenders. There is one legal documentation, which means all the terms and conditions, security, covenants are all the same for all the lenders, and they sign on one legal document. And it is administered by one agent, one facility agent, one security agent, so that the communication will be centered by one. And it is a very, what you call, very formal and set transaction type, which is well documented. So finally, the other facility is financial advisory. So World Bank Group acts like an investment bank also. So aside from lending, they also do financial advisory. Basically, on what we call capital structuring options. They will be able to provide very astute recommendations and advice on the types of facilities you would need. What is the optimum mix of equity participation and debt participation, or the combination of both, which will provide the best benefits to the interest of the borrower or the investor. So basically, they would provide you with all the option or the menu of facilities and options that you would need to finance your project, or to obtain the funding you require for your facility, and then they will arrange the facility for you. Second, they would arrange the facility for you based on a transactional basis, either on a bilateral basis or a syndicated basis, as I mentioned earlier. The next type is that mobilization of funds. As you know, the World Bank Group and particularly the members are composed of very wealthy countries, and many of these countries communicate and exchange views with the higher ranking members of the World Bank, and so they already know that they have particular specific areas of interest. For example, some countries would be very interested to promote environmental projects, such as solar systems, such as water purification projects, such as sewage disposal plants. So the World Bank hierarchy already, what do you call this? They have a consultative body that already has a list of available investors. So whenever one of the group companies, who all of them, by the way, have a very regular consultation and meetings. So when they identify a project in the country which needs the particular expertise and capital required, they would go to the country that already mentioned that they are interested to fund these kinds of projects. So that's what we call mobilization. So either they do it by financing or by debt, but they facilitate the financing of the project, the particular project, in the particular field of expertise that is required by the country. So the last function of the World Bank Group, of course, is research, data selection, database and financial statistics, which are required not only by countries, but by banks, by individuals, by investors, in order for them to be able to have a sound and logical investment or lending decision making. So, as you know, the World Bank has a very, very comprehensive database and library for statistics, etc. So having said that, those are the facilities. Now, just to conclude, I don't think this was covered by Dr. Nunez, but as a summary, all of those activities are being provided by the World Bank Group. And during the fiscal year 2020, there was a total commitment of the World Bank Group, which means signed, agreed facilities in grants, loans, investment, guarantees, etc. It totaled $77.1 billion only in 2020 during the pandemic. Okay? The biggest entity, is of course was RBRD, 36.3%. The biggest was IDA which already mentioned by Professor Nunez, to the poor countries in Africa, etc., was 39%. IFC was 14.5%, and MIGA was 5%. So those were the contributions during the commitments during 2020. So lastly, conclusion, and as a support to the presentation of Dr. Nunez, and it will show you the commitment of World Bank to the world, the commitments by region, which means the combined RBID, IDA, IFC, and MIGA, as I said, was 77.1 billion. But you will be interested to know that the focus was on Africa. 33% was committed to Africa, 19% was committed to South Asia, which is India, Pakistan, etc. And then Latin America was 16%, and then East Asia 13%. Europe, of course, was 11%, and the lowest, of course, was Middle East, because they're oil-rich countries and they don't need support except for the smaller peripheral countries, Yemen, etc., was 6%. So as you can see, the focus of the World Bank is really on development of the world's economy in order to alleviate and improve human conditions. Okay, so that ends my presentation. There's a more extensive presentation. I will ask the professors to circulate it, but that is the summary of my notes. And hopefully you have some questions, and we will ask. I will answer it hopefully in the forum. Thank you very much.
Thank you. Thank you, sir.
Thank you so much, Doc Butch. At this point, may I call on again Dr. Bautista to read the citation for our certificate of appreciation to our STEAM resource speaker, Professor Enrico Grino.
Sir, congratulations. Saludo talaga ako sa iyo, Sir Grino.
Thank you very much.
Number one.
You are my mentor.
Yeah, yes, of course. I always believe in you. I've been telling you. Philippine Christian University.
Si Doctora de la Cruz din.
Certificate of Appreciation is awarded to Professor Enrico Grino Jr. for his invaluable insights as resource speaker during the webinar discourse session for the postdoctorate course Trama 831 Global Finance Strategy. Given this 10th day of July 2021, Manila, Philippines, signed our professors Dr. Chona Hernandez and Dr. Noel Hernandez. Thank you, sir.
Thank you very much.
Thank you, sir.
Thank you so much. Thank you so much po. At this juncture, may I call on Dr. Erwin Zabala to moderate the open forum.
Thank you, Dr. Mateo. So magandang gabi sa inyo lahat. So the floor is open for your questions. I have here first question coming from Sir Chris Dagdag. I think this question will go to Sir Randy Nunez. So the question is go ahead. Is IFC supports MSE Tech and research and development, startup, venture capital? What are the requirements? How to apply?
Actually, thank you for that question. I think for as long as the project will help and it benefit the community where the projects will be established now, I don't see any problem, for proposing that to the IFC. And then for further, requirements needed for this proposal for the MSFC or Tech RD, you can see that link. I will provide the link. Actually, I wrote it, stated it on my PowerPoint, but I will put it on the chat. The link that will help you to consider the other requirement, as what Professor Renew said, that the requirements are not just easy. It is a comprehensive study, and it requires a deeper analysis of the project, which of course the bottom line is it will help the community, benefit the people, and of course alleviate poverty of that certain areas. Okay, here, uh, yeah, I will be sending the link to our chat. There you go. Let me see. There you go, sir. Is the link for these for the requirements of IFC for those interested private sectors. For any project that will be beneficial for the community.
Okay, so thank you for that. So another question coming from one of our my classmates from Mark Abelon. He was wondering why is it China is not contributing to the World Bank, or do they contribute at all?
Actually, China contributes as well, and it's not that much as compared to those first 10, first 10 contributors, but they are contributing. The irony is they're contributing less than those 10 biggest contributors, but in 2019 they are the biggest borrower of 2.6 billion. I don't know what is behind that, but they were allowed, they were allowed to borrow money from IBRD, and of course, borrowing that much will be easier for China to pay it back, considering that they don't need a number of years or grace period to pay back that money that they borrowed.
So thank you for
Right?
that.
Actually, they could pay it within 3 years. 2.6 billion is nothing for them. Yeah, then they can pay it easily within 3 year period, short term borrowings. China, I don't know, for they're just borrowing for political reason. They have so much money invested to, I think, every country in the world, and as I've said, in Micronesia, they invested about 1-2 billions in 3 years. So borrowing from World Bank probably is a political means. Not really they needed that kind of money, but I know there is a different reason why they borrowed that much. 2.6 billion they borrowed in 2019 from the World Bank, and it could be other reasons, but as I've said, is the irony is they contributed less than 2 billion in 2019, but they borrowed 2.6 billion in 2019. So there could be another reason. I don't know, Prof. Greenew, maybe you can enlighten us about that kind of borrowings of China more than what they contributed in 2019.
Actually, as you said, it's political. No? They really don't
Yeah,
need to
yeah, that's
borrow,
what I.
but the international world, particularly the leading countries, which have a vested interest in bringing in China into the world circle. Kung pinabayaan mo yan, baka magsarili na sila. And so it will, when they are within the circle and they have to comply with the international norms, it's easier to control them and to influence them. They are not within the circle, and so it's more difficult to influence them.
That's right.
Okay.
Thank you for that.
Okay.
So let's go to the audience. I have a question. Is it true that China is contesting the status quo, the 75 or 80 years status quo of the US and World Bank by having a bank like AIIB?
Uh, right now, I don't have any idea about the the contesting. The China is contesting US about its position. As I've said, as what Professor Green said, it could be political. US is the most influential member of the World Bank. Actually, they're the first major contributor when it was established in 1944. So definitely, US and United Kingdom has a place that probably no other countries can say that they have to, leave the World Bank just like that, and it could be political, but I don't know if that will be given preferential by the board, the World Bank board member, considering that U.S. Has a very special place in the management of the World Bank. So I don't think that will be a big deal on part of the other members.
It was
So
US. It was US that escorted China in the World Trade
yeah,
Organization,
that's true. That's
right?
true.
So it's
Because
really political.
political, yeah, and it's the most favorite, trade country by the U.S. So it's really political, and considering that China has, I think, is China now plays the number one investors, among the U.S. Investors. Japan plays second, and I don't know what will happen in the next few, in the near future when China buy off all the most of the investments. They already buying off a lot of U.S. You know foreign investors, and also uh, other businesses that originally established by the U.S. By the United States or their own people. I don't know. China is something that the world is watching. We don't know what will happen.
I was thinking about the AIIB, the infrastructure bank. They're lending a lot of money to
Uh-huh.
different countries. I was thinking by that they're contesting the world order or the status quo of the World Bank and
Mm.
the United States upon establishing their own bank with low collateral or not even really thinking about how the countries can pay. So with World Bank having a lot of requirements and with AIIB less requirement. So I was just thinking about
But
that.
yeah. But
Yeah.
this AIIB and Asian Development Bank are working in collaboration with the World Bank. So
Okay.
I don't know why. Of course, they have different policies, rules. But the mere fact that they're working together, to promote, economic benefits to member nations. So I don't know. It's kind of difficult to to decide whether they're maneuvering politically with each other, or Asian Infrastructure Investment Bank is owned mostly by Asian, but they didn't realize that there is a participation as far as there's a World Bank participation in it. They will not be created without the the consultant from the World Bank. Same thing with Asian Development Bank. They needed the IMF and the World Bank to help them in the creation of this bank. So now lately they're trying to antagonize the World Bank, or criticize World Bank because of its process. I don't know. It's politics. It's hard to undermine, what they
Moderator.
exactly want to do.
I think Doc Yulo has a question. Go ahead, Doc Yulo.
Yes, I'm just trying to clarify whether or not when the World Bank extend loans to a particular country, if the approved amount is given in lump sum or installment. Because in the International Monetary Fund, it is through installment. In other words, progress installment. So up to that limit, okay, you're done. There is another additional. That is why, as you have reported and as you have mentioned, there are, or there were, I should say, projects which were abandoned because of the situations that the loans granted were given to them in lump sum. Unlike in the International Monetary Fund, that it is on an installment basis. So talagang it is being monitored. The progress is being monitored. So once you have consumed the amount which you have, which the IMF have had released, then another one is forthcoming in order to continue with the project. I don't know if the World Bank is doing that. And aside, there is what you call a surveillance program on the part of the IMF. They will have to, the surveillance would have to mean that once you are given a loan, the IMF will have to see to it that such a loan is being really is spent for that particular purpose or project. I don't know if IMF is doing, I should say World Bank is doing it, Mr. Speaker.
Yeah, actually, as far as my my research and as far as my work as an auditor of the offshore banking unit, during my time as an auditor, I've seen a lot of syndicated loans that the drawdown will not be in lump sum. They will, especially if the approved loan is, let's say, 500 million, it will not be given one time to the host country or to that project. It will be on a different drawdown, period of time. For example, when I saw and I reviewing the loan package portfolio, the syndicated loans, it was released at least 4 months or 6 months, depending on the progress of the project. So if the project is not met within the reasonable period, then World Bank has the right to hold the balance or the remaining amount to be to be drawn down to this host country. So I think that that the loan will not be given the whole amount until they see the progress of the project. And that is one of the reason why when I was asking that offshore bank why they hold or they held the remaining balance of that loan to to the Philippines, and they said that that is that need to be asked from the World Bank because we're financing it, and accordingly they haven't reported. Philippines haven't reported the progress of the project. So that was held at least the last release was the supposed to be the last release was suspended or held for about a year. So I don't think that the loan, if it is approved, will be given one time to the host country. It should be by drawdown or by the completion or by the progress of the project.
You say a follow-up, sir, Mr. Moderator.
Yes,
Yes,
go ahead.
Say, as explained recently, as was mentioned recently, some of the projects were sometimes abandoned because of the situations that the handling of the loans which were obtained or which was obtained from the World Bank was somewhat coupled with corruptions. That is
yes,
why
sir.
some of these projects were
That's true.
abandoned.
That's true.
That's
That's
right.
true.
So if it is muddled with corruptions, does the government of that particular country doesn't extend or guarantee that in case of failure on the part of that particular company, which obtains loans from the World Health Organization, does that their government does not extend guarantee that in case of default on the part of the debtor, it is the government that would have to answer for the default of that particular debtor. Mayroon ba ganun is there such thing as provisions in the law of loans on the part of the World Bank?
Well, right now, the only private sector that was given, this syndicated loan from IFC, San Miguel Corporation, in building this Skyway. But I know that before the loan was approved, there is a collaboration between the government and SMC that the money will be not directly given to SMC. It will be sent through the government, and the government will be responsible for the drawdown. So that means the government is responsible or is a guarantee of this loan, that in case SMC failed to complete the project or failed to pay back the amount borrowed, then somehow they are jointly and solidarity liable, to the World Bank. It is
last question related to San Miguel. Please, I think we have to be informed, everyone, that when the San Miguel corporations obtains loan from the World Bank, it was guaranteed by the Philippine government during the time of Pinoy. So in case of default or failure on the part of San Miguel Corporation to pay their indebtedness to the World Bank, the Philippine government is liable to pay the World Bank because of failure in case of failure of San Miguel corporations.
That's true.
And it is very clear under our law, under Article 7, Section 20, that the Philippines may contract and guarantee foreign loans, which includes private institutions or corporations. So that's so much so that in case of failure on the part of the corporation, it is the government that would have to assume the liability or indebtedness of that particular corporations under Article 7, Section 20 of our Constitution.
That's correct. That's why they have to be careful. The government, our government, has to be careful to whom they will collaborate, to whom they will be in partnership with. San Miguel is not, is not a corporation that has just established yesterday. They've been in the operation for more than 100 years. So it could be a reason that the government is willing to be in partnership with San Miguel, and they know that San Miguel, will not play it lightly. That this loan has to be paid in due time. So that's correct, sir. The government will be the one, to pay back the loan in case San Miguel, will not be able to comply with this with the terms of the World Bank. You're right, sir. Government should be there and definitely will pay back the loan in case they failed or San Miguel failed to pay it back.
Sir, we can add some things.
Go ahead, please.
Okay. As I mentioned, most of the big projects are based on a project financing basis. So talking about IFC, so in general, this will cover the San Miguel transaction. First of all, the due diligence process is very tedious and comprehensive, as we both mentioned, Professor Niños and myself. But in a project financing and a syndicated loan, there are many conditions and inherent practices or safeguards within the project and the transaction itself that would more or less mitigate or alleviate the risk of default or the risk of corruption. Now, to answer briefly your first question on drawdown, basically in most or even all of the project finance facilities, you must have a drawdown schedule, which must be based on the percentage completion of the project.
That's right.
When you do a project finance timetable, you would have the various stages of the construction. You know, the engineering design, survey, clearance, construction, etc., etc. So each of those, before you have a drawdown, you have to meet the milestone requirements, and you have to submit documentation that would prove that you already did the work done. Then you will be given the next installment. So
yes.
mitigate the risk of spending more than what you have intended the project for. So yun yung drawdown. Now, on the repayment, there are many covenants, which are basically requirements of the project finance, which have to be adhered to by the government. One of the most basic project finance tools or safeguards is the capturing of all the cash flow of the project. As you know, project finance is a standalone basis. So going to the highway, the skyway, all the proceeds, the toll proceeds must go into a specific account controlled by the agent in order to make sure that all the proceeds go to this account, and a payment waterfall from all the proceeds. The first, of course, is to pay the operational expenses of the project once it is done. Because if you don't do the operational expenses, then it cannot continue its operations to generate more cash flow to repay the project. So the payment waterfall is all the operation expenses have to be done, and then all the debt service has to be paid. The debt service is based on a very specific installment or amortization schedule and interest payment due, which is agreed when you sign the loan agreement from the start. So maraming mga basic safeguards in the syndicated loan and project finance structure that will alleviate or mitigate the risk of corruption. Yun lang po.
Yes.
Of course, it's more complicated than that, but that's the basic premise.
Thank
That's
you
right,
for that.
that's
Okay.
So any other question coming from the audience? I think si Doc Mark have a question sa chat box. Would you like to ask a question, Doc Mark?
Doc, it was already answered. I asked for an example of any project from the Philippines that can pay its own debt service.
Okay, so thank you for that.
I think
Doc
the
Ramon
survey is
Santos.
one good project.
Yes, go ahead.
Doc Erwin, I
Sir,
think
Doc
there
Mateo.
is a valid question here from Dr. Ramon. Why do
Yes.
leftists dislike or
Leftists.
hate World Bank?
Yes.
I share the same sentiment. Okay.
So why do
Well,
leftists hate World Bank?
okay, when I was studying, and I raised the question why our peso is being depreciated, and my economic and political teacher said that it's because of the IMF and our loan borrowings from the World Bank. And I said, why? Because there's a certain requirement that before that loan will be released to our country, there should be an adjustment of our monetary currency to depreciate the peso. So how I'm trying to to think what is the effect of that depreciation to our borrowings. So until I realized that if we want that package, that loan, if we agreed to that amount that will be lent to us, then we have no choice but to agree to the banks, to the World Bank package of legal and economic reforms of our country, and that probably lead to the depreciation of our peso. Maybe Professor Brino will elaborate on that regarding that kind of trade-off by the World Bank before that money will be released to us, that they could dictate our economic reforms, our legal reforms, and maybe the depreciation of the peso.
Actually, the World Bank is concerned about the future capability of the country to repay the loan.
Yes.
They are concerned on both the monetary policy and the fiscal policy of the country, so that they can be assured that the cash flow projections and the feasibility study are based on sound assumptions that are executable, workable, and logical. So there, as you know, most of you are professors, there are fundamentals that need to be ascertained to stabilize the economies of the country. So therefore, part of the covenants and part of the requirements of any financial institution that is lending to a borrower or an investor will require that they are comfortable that the conditions of the country or the company per se will not change or will not fluctuate adversely, that will result in the significant alteration of the cash flow projections, which will not be able to repay the loan. So yun ang basic assumptions. But the rest, I'm not economics PhD, but all of you will understand that if the fiscal and monetary policies of the countries are sound, that means that it will have consistent or sustainable growth and stability, which will assure the investors or the lenders that they will be repaid. So yun ang underlying reason.
Yeah, and I remember during Marcos' time that we are on the debt crisis. Remember that? And that's the time that the depreciation of peso really plunged to a wide margin. And reading a newspaper, some business news, that we agreed to the bank and IMF package, of our reforms, that it's a kind of coercion in our free market economy. So I don't know, but somehow it could be the reason, and there it's sometimes it's as I've said, as we have said, Prof. Grino, that we are not economists. It's just the thinking that they could be an influential to our free market economy. I don't know, but somehow it could be.
As I mentioned, the World Bank is a political organization. There is a lunch. If you need something from them, you must be able to, or you must be willing to adhere to their terms and conditions.
Yes, so yeah,
so
that's
yun ang,
right.
yun ang choice doon eh. Kung ayaw mo, di huwag kang umiram.
Tama. That's right. That's right.
Not a good analogy because we need the money. So we are forced to adhere to the terms and conditions.
Yes. That's right. That's right.
I
So
think it's
those are
similar.
some of the critics.
I think it's similar with China. No? Once they lend us money, we have to follow their rules in terms of.
Well, that's why just to answer your other question, just to elaborate, China cannot compete with the World Bank, and they cannot replace it because the World Bank is an institution which was established in 1944-45 by countries, and it is very established. What China is doing is that they are creating a vehicle through their lending strategy to the poor nations so that they control the influence of the poor nations. As you know, it is controlled, managed by the Western world influence. The top 6-7 nations are the allied nations, the G8. So wala rin yung China. So walang influence yung China in the world if they do not lend to the poor countries. So what they are doing is that they are lending on very soft basis or low interest basis and low covenants, no restriction basis to poor countries. Kaya lang maiipit ka.
Yeah.
Pay, if you look at the terms and conditions of the loan agreements,
Mhm.
you have to basically turn over your country to them. So that is, again, I'm not a politician and I just arrived back in the Philippines 2 years, but that is my main concern with the lending of China.
Mhm.
A lot
There
of
is a-
lending to the Philippines is like that because there are onerous conditions which can
There.
and should not be adhered to.
That's
Okay.
right.
Okay, thank you. Yun lang. I don't
Difficult.
have politics,
Yeah.
but that's it. Huh?
Thank you
Yeah.
for that.
That's
So any
correct.
other
That's correct.
question for our guest speakers? Okay, so I'll turn the time
Erwin?
to Dr. Mateo. Yes.
Okay.
Doc,
I think
Doc, I think one more.
I think someone from the audience is raising his hand.
Okay, go ahead.
Can we acknowledge?
Hi, sir. Yes, good
Hello.
afternoon.
Okay.
Hello.
Can you hear me, sir? Yes. Okay.
Yes, Sir John, we
Sir.
can hear you.
Yes, we can hear
Yes,
you.
sir. Sir, I observe because in the World Bank projects, like there are lots of engagement. As we all know, at the end of every project, there is this project assessment. No? And of course, the project assessment will have to go through several protocols. Like for example, meron tayong tinatawag na self-assessment. Tapos meron tayong consultant's third-party assessment, and then we also have the final assessment of the World Bank on the project performance. I always notice on the projects, they always evaluate below performance on a lot of the, you call the indicators. And natatawa si sir. So, and then
Below
somebody told
performance.
me during one engagement of the project, ito lang, don't quote me for this, pero she said really that, you know, John, these are bank. At the end of the day, they would expect that their money will be returned to them. It's not really about, you know, solving problems or whatever. You take a look at the projects, review them for their performance. They always see that it's below performance. So, so how could how do you view this, sir? This kind of scenario na all of the projects are most of the projects below performance.
That is very true actually. Uh, Especially in the rural development project of the Philippines, no? When they make the assessment and the the project was delayed and the project let's say the project consultant was blaming the government for the delay in the drawdown of the money. But the government, on the other hand, was saying that you haven't given us your percentage of completion. Why do we send? Why do we release the? Why do we need to release it without the evaluation? So in turn, most of the assessment, uh, the project is being completed, but it was a long delay, and that it resulted to the underperformance, of course, of the project because of the delay. But apparently, it is being completed. It's completed, and the money was also uh, delayed in in the releasing. I don't know if it's the fault of the contractor or the project consultant or the government. But somehow the assessment is underperformance. It's basically because of the delay. It's not because the project is not done, but it was just a delay, much delay. And I don't know. It
Agree
could be
po.
the government or the contractor or the project consultant.
Okay, thank you, Doc. Thank
Okay,
you po.
thank you for that. So I'll turn the time to Dr. Mateo.
Thank you so much again for our straightforward and with candor resource speakers, no, promptly on answering those queries and questions coming from the participants. Thank you also, Dr. Erwin, for facilitating the open forum. So at this point, may we call on Dr. Bioni to give us the synthesis of this discourse.
Okay. It's actually Johnny, Varela.
Sorry.
Okay. So to me, was given the difficult task of synthesizing and recalling the major points raised by the two great Filipino minds in international financing. Let me see my scribbled notes. The problem is that I myself cannot read my own handwriting. So, okay. So our two speakers, of course, describe background, the history, okay, the mandate, the trust, the mission of the World Bank and other financial institutions. Specifically, where do they get the money that they lend to the borrowing countries? Which countries contributed how much? And where do they spend the money that are lent to the countries? Of course, they said that they focus on eradicating poverty and, of course, concentrating on lending money to the poorest of the poor. Of course, they also differentiated or rather cited the differences between capital equity financing and debt financing, of course, with its characteristics, and then the priorities and some conditions that this borrowing, this financial institution set for the borrowers, like of course, funding SMEs, of course, and of course, I am very sure the postdoctoral students really benefited and were enlightened by the presentations. Of course, they were enlightened by the various issues raised about international financing. And of course, the postdoctoral students can now take better and more judicious positions regarding the issue of borrowing. Okay, thank you very much. Okay.
Thank you.
Thank you so much, Dr. Diony Varela. Okay, next we will call on our professor, Dr. Chona Hernandez, to give us her takeaways. Good evening po, Doc. Chona.
Nakamute po kayo, ma'am. Hello.
Mute. Sorry, I was not able to unmute it. Again, good evening, everyone.
Evening.
We really appreciate the webinar organized by our postdoctoral students, the Pioneer Batch of 2021. We acknowledge the two experts who are our speakers this evening, Professor Nunez and Professor Grino, together with all the postdoctoral students. I would like to say thank you to all of you. We do hope that there will be another next time for this type of webinars. And to all the students who participated in this webinar, we appreciate your desire to learn more about global financial strategy, of which this webinar has been organized by the Pioneer class. So I would not be getting so much of your time, but the substantial insights that was given to us, I hope that you will bring it with you. And not only for today, but you have to internalize it and relate it in the different fields of your discipline. So thank you so much, and have a nice evening ahead of you. God bless.
Thank you.
Thank you so much, Dr. Chona, for giving also us the motivation to do something like this. So your initiative is very much appreciated. And of course, the other half, Dr. Noel, to give us his closing remarks. Good evening po, Doc.
Good evening, Doc Mateo. Good evening to our dear PCU administrators, our President, Dr. Junipin Gowan, to our Vice President for Globalization and Extension Program, Dr. Margie de la Cruz, to our dear speakers, guests, and graduate school students, especially our postdoctoral students, considered to be a pioneering batch of 2021. With deep appreciations, I would like to congratulate this postdoctoral class, chaired no other than by Dr. Estrelita Bautista, for having realized this webinar on topics World Bank and Republic of the Philippines Global Financial Strategy, discussed by Professor Fernando Nunez, a certified public accountant, and Professor Enrico Grino Jr., respectively. Indeed, the topics discussed have given us clear and substantial insights on a global financial strategy. It has allowed us to understand how World Bank assists countries, especially those who are poor countries. Likewise, how our country is strategizing to address our financial concern. I hope that in the future, we will have another opportunity like this. Our gratitude to our two commendable speakers. Despite the short notice, you were able to share your expertise to us. May you both continue your undertaking with joy to be of service to others. I would like also to grab this moment once again to congratulate our dear postdoctoral students, the pioneering batch of 2021, who had done a breakthrough in the strategies or multiple strategies to concretize the learning in both courses under Dr. Chona M. Hernandez and myself. The class were divided into 3 groups. Last second trimesters with outputs on webinar on shortage of men during pandemic, quarantine, and how it has affected the functions of NDRRMO, of the National Disaster Risk and Reduction Management Office. COVID-19, the typhoons and the earthquakes given by Major Bon Villanueva, and a talk on the overview of modern digital marketing for local and international marketing given by Dr. Chris Degdag, organized by Drs. Abilon, Makalaging, Nabwa, Wado Tipo, Valera, and Sabala, and of course chaired by Dr. Bautista. The second group presented a topic on Toyota productivity through quality, which was discussed by Dr. Alan Romblon. Also, a comprehensive book review on the future of human resources. At is another output done by the second group, namely Dr. Baak, Prehinal, Ramon Santos, and Santiago. The last group presented the best practices in human resources, modeling 2 companies, such as San Miguel Corporation and the Jollibee Food Chain Corporations. Was presented by Drs. Portes, Crisostomo Digma Saho, Jaime Santos, and of course the late Dr. Will Lumagsaw. For this third and final trimester, the pioneering class endeavor had showed the exemplar of being postdoctoral degree holders with this webinar case study analysis on IMF or International Monetary Fund and the research output of the class. Truly, all of them
show ideal outputs appropriated for postdoctoral degree program. Our congratulations to the pioneering batch of 2021. Kudos to all.
Thank you so much, Dr. Noel, for that. As teachers and students alike, so on behalf of the webinar group, let me leave you with this Global Education 2030 agenda. Every learner matters and matters equally. Good night, everyone. Thank you for joining us tonight.
Thank you. Thank you.
Thank you.
Congratulations.
Photo?
Good night.
Photo?
Good night.
Yeah, we will have. We will have.
Yeah,
Share
yeah.
natin.
Okay.
Oh,
Can we share our screen so we can our video so we can have a photo op? Okay, we have two screens here, so let's start. Crisostomo. Next slide. Next screen. Okay, 1, 2. One more.
I am here. I am here.
Yeah. Join us, please. 1.
Yeah, I'm here. Madilim lang po.
Opo, ma'am. Madilim. Isa pa, ma'am.
Driving yata, driving.
Opo.
Sorry po. Sorry.
Sige, ma'am. 1, 2.
Wala ilaw. Oh, one more. Wala ilaw. Ayan. Pwede na po.
Yan.
Meron na.
1, 2. Okay.
Salamat po.
Thank you so much. Good night, everyone.
Thank you.
Anyway,
Thank you,
tomorrow,
speaker.
what time?
Have a nice weekend, everyone.
Doc Bautista.
Doc Bautista will announce
Ito pala
something.
eh. Ito mas maliwanag oh.
Yan, sige po. No worries.
Isa pa sir.
Oh, isa pa daw kay ma'am. Go. Oh, smile uli. 1, 2. Yes.
Salamat.
Okay.
Thank you.
So,
Thank you.
before we
Nakita rin ang beauty mo, ma'am.
nasa biyahe si ma'am.
No,
Before we
nasa
leave,
biyahe. Galing ako sa Clark. Habang
Okay, before-
nagmati ako ng Rotary, nakikinig naman ako.
ingat po kayo, ma'am.
Yes, Doc Chona.
Doctors,
Yes.
before we leave, may we ask Dr. Bautista of the final schedule for tomorrow?
Yes,
For the
ma'am.
final webinar on project
Ay,
management.
you'll have a class tomorrow.
Yes, ma'am.
What
We're
time po,
going to
ma'am?
We're going to have Jan Cabrera Placente for the project international project management framework and practices, okay, at 4:30.
Okay.
Then we're going to have after that Diosdado Liqueron, also a PhD, who is also an expert on project management because you know very well that many of the companies have already conducted their project management trainings ahead of some educational institutions, and that's one of the reasons why these young people have become project managers at an early age and have actually conducted their own businesses here and abroad. And I wanted them to be our resource speakers to give what I call this inspiration to many young people who actually may not have the degrees yet, but they have been motivated earlier to put up their own businesses internationally and locally. So tomorrow 4:30, Jan Cabrera Placente and Diosdado Lequeron. And of course, I'm still waiting for the comment of our Kapitan Soseng. You know why? He is a farmer, also a cooperative builder, also one of the original trainees of IRRI, International Rice Research Institute, on rice and other rice varieties. He also experimented on feeds, basically in the province of San Jose. And also a barangay chairman and president of the Association of Barangay Captains in the whole San Jose del Monte City, Bulacan. He does not I don't know if he's worried because he's not high-tech. He does not have any PowerPoint, but Attorney Galicia, I'm expecting Attorney Galicia to be helping me get him because his actual experiences in co-op building will always enlighten us as to how they all started here in San Jose del Monte City, Bulacan. Even with only an accounting degree, he actually was able to survive the challenges that they all face here. Now, San Jose del Monte City is one of the rising cities now here in Bulacan and the NCR. So that's tomorrow. So I will still give you a report on Captain Soseng and Attorney Galicia by probably later tonight or early tomorrow.
Okay,
But
sige mo.
the two of them, Placente and what we call this, Liqueron, will already present for tomorrow. And I'm really happy that we are going to have these young people as models for our young generation who are actually high-tech in a lot of ways. And of course, with Kapitan Sosing, who is so much low-tech, but was able to put up the cooperatives here in San Jose del Monte, Bulacan, as a leader. That's it, ma'am.
So thank you so much, and we really enjoyed this evening's academic activity. So see you all again tomorrow.
Thank you.
Thank you po.
Good night,
Our
everyone.
proceedings is recorded, so we can have a copy of this anytime once it is
Thank you.
done. So thank you
Thank
so
you,
much for
everyone.
joining.
Prof. Nunez, Prof. Grino, thank you very much.
Thank
Thank you very much, and congratulations, everyone. God bless.
Thank you. Good night. Good night.
Thank you.
Night.
Yes. Edrinho, thank you.